In May, Saudi Arabia decided to increase the prices of its oil sales to Asian customers. This decision came shortly after the country, along with other OPEC-plus members, made a surprising move to cut oil output. As per the price sheets reviewed by Bloomberg, Saudi Aramco, the state-owned oil company, raised its selling price for the main Arab light crude oil to Asia by 30 cents per barrel. This is the third consecutive month that prices have been raised. Interestingly, before the unexpected OPEC-plus decision, traders had predicted a drop of 43 cents per barrel for Arab light prices. On Monday, the price of oil experienced a substantial 8.4% increase, marking the highest jump seen in nearly a year. The Organization of Petroleum Exporting Countries, OPEC, and its associated nations recently agreed to limit their daily output by nearly 1 million barrels beginning next month, which is the primary cause of this unexpected surge. OPEC reached this decision in concert with Russia, the world's largest oil producer. The two countries agreed to reduce output by 500,000 barrels per day, with Saudi Arabia leading the charge as OPEC's de facto leader. Saudi Arabia recently announced that it had authorized a plan to become a conversation partner of the Shanghai Cooperation Organization, SCO, indicating that it may be shifting away from the United States and toward China and Russia. This move may render previous efforts by the U.S. to keep Saudi Arabia out of the China-Russia sphere of influence ineffective. The country had already signed a memorandum of understanding on September 16, 2022, granting the status of an SCO dialogue partner, but didn't publicize the news until now, shortly after restoring its relationship with Iran through a deal brokered by China. SCO is an extensive organization covering a significant part of the Eurasian continent, constituting around 60% of its total area. Furthermore, it accounts for more than 40% of the global population and 20% of global GDP. The organization's establishment dates back to 2001 and was formed based on Shanghai 5, which China, Russia, Kazakhstan, Kyrgyzstan, and Tajikistan established in 1996. In addition to its vast scope, SCO subscribes to the notion of a multipolar world, which China expects to dominate by 2030. To this end, in early January 2022, officials from the Chinese government and foreign ministers from countries such as Saudi Arabia, Kuwait, Oman, and Bahrain, along with the Secretary General of the Gulf Cooperation Council, held a meeting in Beijing. During this meeting, the participants discussed the finalization of a China-GCC free trade agreement and the need to deepen strategic cooperation in a region where U.S. dominance is weakening. It shouldn't come as a surprise to those who have been following Saudi Arabia's developments since Crown Prince Mohammed bin Salman, MBS, rose to power in 2015 that they have taken a step away from the United States and toward the China-Russia axis. Back in 2015, MBS was the deputy crown prince with a strong desire to become the next in line for the throne after King Salman. MBS's time as the defense minister proved to be a disaster, with the war against the Houthis in Yemen escalating and the indiscriminate bombing of civilian targets being roundly condemned by the West. The German intelligence service, the Bundesnachrichtendienst, leaked an internal-only assessment report of MBS to various trusted members of the press that described him as a political gambler who was destabilizing the Arab world through proxy wars in Yemen and Syria, all in an attempt to rebuild his reputation and ultimately usurp Mohammed bin Nayef bin Abdulaziz Al Saudi as crown prince. According to reports, MBS devised a plan to sway senior Saudis who were backing his opponent. The idea was to sell a portion of Saudi Aramco, the country's flagship company, through an initial public offering IPO. The plan seemed promising as it had several advantages that could work in MBS's favor. Firstly, it would generate a significant amount of funds that could help Saudi Arabia counter the disastrous financial effects of the 2014 to 2016 oil price war. Second, it would most likely be the largest IPO ever, which would enhance the country's reputation and strengthen its capital markets. Finally, the proceeds from the sale could be used to finance the development of Saudi Arabia's Vision 2030 project aimed at reducing the kingdom's dependence on oil and gas exports by diversifying its economy. MBS presented a proposal to the senior members of the Saudi Arabian leadership. His plan included specific goals that needed to be achieved. Firstly, MBS suggested that 5% of the company should be offered to the public. Secondly, he proposed that this public offering should raise at least $100 billion. By achieving this, the entire company would be valued at $2 trillion. Lastly, MBS recommended that the company should be listed not only on the domestic Tadawul stock market, but also on one of the most reputable global stock exchanges. MBS had the New York Stock Exchange and the London Stock Exchange in mind for this. It appears that none of the objectives were met, as foreign investors eventually regarded Saudi Aramco as a highly detrimental entity, both in terms of politics and finances, as they became more aware of the organization. At that juncture, China intervened and provided a solution that allowed MBS to maintain its reputation. This plan involved China paying the necessary $100 billion for the entire 5% share and executing the transaction via a private placement, which would prevent any potentially damaging information regarding the agreement from becoming public knowledge, particularly to those senior Saudis who were against MBS. After the rejection of an offer due to concerns about the further alienating the United States, the relationship between Saudi Arabia and China continued to grow. The offer was turned down by King Salman because he did not want to exacerbate the tensions that had already arisen as a result of the 2014 to 2016 oil price war. This war had been initiated by Saudi Arabia with the aim of crippling the fledgling shale oil industry of the United States. Nonetheless, the relationship between Saudi Arabia and China did not suffer, and it continued to thrive. A year before Russia invaded Ukraine in February 2022, Amin Nasser, who is the chief executive officer of Saudi Aramco, attended the annual China Development Forum in Beijing. During the event, he made a statement that highlighted the importance of securing China's energy needs for not just the next 5 years, but for the next 50 and beyond. Specifically, he emphasized that it was a top priority for Saudi Aramco to ensure the continuing security of China's energy needs. A year later, after Russia had invaded Ukraine, Mohammad al-Qahtani, who is the senior vice president of Aramco's downstream division, announced the establishment of a one-stop shop in China offered by his firm. He stated that the contemporary energy crisis was a direct outcome of flimsy international transition plans that had deliberately disregarded energy security and affordability for all. He further added that the world needs clear-headed thinking on such matters. He expressed pride in China's 14th five-year plan, which gives priority to energy security and stability, recognizing its significant contribution to economic development. In conclusion, he emphasized the importance of prioritizing energy security in global energy transition plans to avoid future crises. During a certain period of time, Saudi Arabia and Russia were strengthening their friendship. Meanwhile, the U.S. shale oil sector had undergone significant changes after the oil price war of 2014 to 2016. The sector became highly efficient, producing oil even at prices as low as $35 per barrel. In contrast, Saudi Arabia's break-even price for a barrel was over $84 at the time, making it unable to compete with the US. Due to the country's previous disastrous oil price war, Saudi Arabia's reputation with other OPEC members and the global oil market was damaged, leaving the country with no way to raise oil prices to address its budgetary concerns. Russia intervened at that time, supporting OPEC's production cutbacks that were aimed at boosting oil prices globally and helping OPEC members recover their finances, which have been severely damaged. Since then, OPEC-plus has been established as a structured representation of this support. In addition, Russia and China have leveraged their relationships in the Middle East, following the United States' withdrawal from the Joint Comprehensive Plan of Action with Iran in 2018, Syria in 2019, and Afghanistan and Iraq in 2021. Considering the various factors involved, it seems that China could play a key role in facilitating negotiations between Saudi Arabia and Iran, who are the leaders of the Sunni and Shia branches of Islam respectively, to reach a diplomatic settlement. Despite a brief comment by John Kirby, the national security spokesperson at the White House, that The Iran-Saudi deal has nothing to do with China. It's quite evident that China holds a significant stake in the matter, while the United States doesn't seem to have much influence on the issue at all. Considering the broader geopolitical situation, it's not unexpected that Saudi Arabia has recently taken measures to distance itself from the United States and forge closer ties with China and Russia. The country's objective is to position itself as a major player in the worldwide economy by decreasing its reliance on oil and gas exports. Additionally, Saudi Arabia intends to maintain its status as the uncontested leader in the region, while simultaneously maintaining a balance in its interactions with Iran and other nearby nations. The effectiveness of these measures remains to be seen. But what is clear is that Saudi Arabia is taking bold steps to protect its future in a rapidly evolving global environment.